Good morning, good afternoon, good evening, yWhales, wherever in the world you are today. We've got Randy coming in from sunny California, and really looks amazing there. Heat wave here in the Midwest. Most importantly, what we're kind of seeing right now is the summer is kind of trailing to a close. Bitcoin has come back from 18,000. I think it was its low, maybe even a little lower than that. We're sitting at about 23,000 today, so coming back up, but still quite a bit of FUD in the market. There's a lot of large funds. We're still seeing Three Arrows Capital and a bunch of others in the middle of meltdown. So the market isn't hot. It's definitely not a bull. But most importantly, what we're really seeing a lot of, and I think it's so important in this phase, is we're seeing the innovation. We're seeing the builders suddenly put down the trading view of watching their coins every 10 seconds and saying, what can I build? How can I build it? And why should I build it? And Randy is a perfect example of kind of that serial entrepreneur in this space as well as others. So Randy, let me go ahead and kick it off to you. How you doing? But let's start off with a little bit of background of kind of what got you interested in the space, your first exposure to cryptocurrency, and really what got you excited today.
Great. First of all, thanks for having me on your show, Jay. It's a real pleasure. Watch a lot of your podcasts, and it's very interesting what you guys are bringing to the market. So Randy Prado from Fairyde. We're a new class of ride-hailing and transport booking platform starting here in sunny Napa Valley, California. So we're an early stage tech company intent in creating a ride-hailing service that powers a marketplace through technology, specifically Web3. I actually grew up in Melbourne, Australia, but it's a very convoluted accent because I spent a lot of my time actually over here in Napa at some stage of my life, and also in the Philippines. But, a good part of my teenage year, I'm a marketing guy by qualification, but really a tech head, having built my own first DOS-based computer at the age of 14. So I started my career here with Hewlett-Packard, and then eventually in Melbourne as a marketing cadet in the mergers and acquisitions group. So it's always been in my blood to do startup. The same team that brought the HP calculator to the market, so I'm showing my age now, was the team that I actually got my first feel of what a startup's like. So since then, my passion is all about building a tech company from scratch, which was basically what we did when I was appointed as a country director, as the first headcount for Nokia Internet Communications in Australia and New Zealand. So what we used to do then, we used to evangelize at Nokia back then that the voice has gone mobile, and soon data or the internet will also be mobile, which is what we're seeing today. Proudly, we pioneered the proliferation of what was then the WAP technology, the wireless application protocol. To me back then, Jay, that was the equivalent of what Web3 is today. That's what's getting me excited, because purely we're starting an adoption stage. We had a WAP server, which we're trying to introduce to the corporate world for carrying data and internet communication. And people were skeptical, as what they are today, about blockchain and Web3. So to proliferate this even worse was when we're introducing WAP to the banks, to what we're now accustomed to, what internet banking is today, and IoT and m-commerce, etc. So my personal view is that Web3 is how WML, wireless markup language, was back then, before it became the mainstream technology for web and mobile for several years. People used to be wary about using their cell phones for paying and buying things online. My friends and relatives used to think I've lost it because I'm trying to convince them to use their Nokia 7110 to access the Westpac bank account, which was one of the first banks in Australia at the time to introduce the mobile banking.
Yeah, there's so many good points there that you bring up, and absolutely it's easy to remember, but it's also easy to forget how, like, when you talk about putting a credit card in online early in Web 1, in the late 90s and even early 2000s, people would tell you you're insane. Like, there was special credit cards and ads like, this credit card is safe to use online. And I remember, I think they still have it. It's probably downplayed, but one of my credit cards used to be able to log in, and they give you a special number with, here's the amount that you can use, and it's a one-time use number, and that's it. And so I think that still proliferates a little bit, but the idea was that, nothing online is safe. It's evil people. It's everything can be stolen. There's no security. And a lot of this is pre-SSL. So, I mean, I completely understand when you kind of think back to those early days of, like, we're just trying to get like devices to talk to each other. We're just trying to get someone to use the technology's there. It's solid. How do we get users to actually want to use it? It's very similar today. Blockchain exists. It's relatively stable. Does it have its issues? It depends on the day of the week and the chain you're on. But yeah, absolutely, it has the problems. But for the most part, they keep chugging away. The idea that people are going to move their monetary assets, their currency, their assets, and their identity online sounds crazy today. But we'll look back in 10 years and go, oh my God, you used to carry around a wallet? Like, what do you mean you used to use, that like cash? Is that
Yes.
kind of the way you feel? Is like, it's just a matter of time?
Well, the funny thing is that the parallel between back then and today, Jay, is that, here we are, we're trying to actually put everything online, our medical records, our wallets and so forth, and there's also the decentralized platform versus, the TradFi and the DeFi and so forth. Back then, when we were trying to introduce the wallet, it was a question of who owns the customer. The telco says it's our customer, but the bank says, no, it's our customer, right? So who's going to carry the credit? Technically speaking, the telcos themselves, they're a bank because they lend us so much money, in our phone bill. Sometimes I rack up about $10,000 to $14,000 on my phone bill, right? So essentially, that was a pretty historic time for me. So apart from the fact that, my son was born in 2000. The Y2K bug was upon us. The dot-com era was at its peak. And we did our first startup by doing a small backdoor listing on the ASX, right, the Australian Stock Exchange. So in 2000, the very first startup I co-founded after my tenure at Nokia was called Portitech, Portable Internet Technologies. It was listed on the ASX as Orange Solution. So if you remember the Palm Pilot.
Yep. Oh yeah. Oh yeah.
So we developed the first ruggedized app based on the Palm OS back then, and everything else that was wireless. So 20 years later, I'm feeling a deja vu, seeing the 2020s will be another decade full of historical and defining moments for the information technology. Not saying that the introduction of blockchain Bitcoin earlier was anything less ordinary, but it's really amazing where we are at the moment.
And let's take a guess. And this is a guess. We're not going to hold you to this, but if we go back to kind of Web 1, which was really kind of started, I'd say in like 92, 93 would be the early, Prodigy, CompuServe, everything else. I want to say AOL showed up around 97, 98. Where do you think that the Web 3 kind of cryptosphere, where do you think it sits today in terms of just general year of compared to Web 1?
Man, it's light years ahead, Jay. It's chalk and cheese, right? You can't really make a comparison. It's like trying to compare, horse-drawn carriage, right, versus where we are today with battery-operated Teslas.
Yeah.
Right?
Okay. I was more referring to adoption rate, the number of how we get it. So I apologize, I didn't clarify that question. So as far as like consumer adoption. Because AOL brought on just a massive amounts of people. It was the first time people go, oh, okay, I get it. I can use this.
Yeah. Well, I think the wide proliferation of smartphones is making the difference. Back then, if you remember the 7110.
Oh, God, yeah. Indestructible.
With a mouse on front of it.
Yep.
Right. So, nothing's changed back then, actually, because when we launched it, for the major banks in Australia wanted to send me the web server back because no one's adopting internet banking at the time. Unfortunately, Keanu Reeves killed our market when he launched that phone, and everybody just want to buy it for looks, right? Not for usage, right? Yeah. But today, if you launch an app, everybody will see it. So it's just a matter of downloading it, right? Thanks to people like Steve Jobs, you can download now an app and penetrate the market. And hence, that's the same question I get asked by people. How's the adoption going to happen for Fairyde? Well, the entry level is pretty low.
Let's go ahead and talk about downloading an app, and so give us the overview of Fairyde if you want the elevator pitch per se, because it's a very interesting concept and a twist on some things that exist today.
Yeah, well, if we can fast forward to 2009, we're now decided to move back to Manila, Philippines, to set up a boutique software development company called Republicis. So we did all sorts of apps for other Australian and American companies, from logistics management, point of sale system to crowdfunding platform. But it wasn't until 2018 when we developed our own e-wallet platform called Phone Pair in the Philippines and HyperPocket over here in the US. So, but when we were about to launch the e-wallet in 2020, as we all know what happened, right? In the midst of the pandemic, myself, Deb, and I, we're working from home. So what are we going to do, right? So we can't launch the wallet at the time because we couldn't even leave our house. So we then developed other platforms that we could leverage the e-wallet from. So like a real estate buying and renting platform, kitchen delivery system for cloud kitchens. And we also developed a ride hailing app for tricycles in the Philippines called Trike, right? If you know those tuk-tuk in Thailand, so there's no such a thing, and Grab is a major player there. How about we create an application. So with my co-founder, Oxy, who's a Lyft driver here in Napa, so the app, he asked me to localize it for Napa Valley at the time. He gets pinged directly from riders stuck in the middle of nowhere here in Sonoma or, up in St. Helena at an odd time with no ride hailing car to pick him up. So my first reaction was, are we competing against the monolithic companies whose home base is right here in Northern California? But after we assessed the market, we thought there's a use case to create a platform that is not necessarily competing against incumbents, but to create an app that embraces Web3 technology. What do I mean by that? So Fairyde have quantified the effects of the current market factors in ride hailing and chartered transport services to develop a more robust business model here. If you look around, there's a lot of those chartered buses, private wine tours, and so forth. So having done our own extensive research and analysis, we're able to isolate and quantify the pure evolutionary effect of time on adoption for ride hailing and chartered transportation services, right? $1,200 a day to rent one of those limousines over here in Napa Valley. So we've taken those into account, each socio-demographic variables in the evolution of ride-hailing and chauffeur-driven transport usage. Our market research generally relied on secondary data because obviously by conducting our own survey to quantify the model, our competitors won't share the data. So the demographic variable in individuals' propensity to use ride hailing, it's softened over time. There's no real differentiator between Lyft and Uber, right? If I go overseas, use Didi, Grab in the Philippines, it's the same thing.
Yep.
Right.
Yeah.
So resulting to reduce the differences in ride hailing services in geographic segments that we studied included Napa Valley, Vegas, Orlando, Florida, San Francisco downtown, Los Angeles downtown, Manhattan. If you can see the pattern there, Jay, it's a combination of really high intensive population with a lot of nomadic population coming in and out, right? So it makes sense to get a ride hailing company to pick you up or take you to wherever you're going.
Yep.
So the market gap we identified are evolutionary dynamics specific to the ride hailing industry, which will become the precise reasons in our attempt to disrupt this market. So our market strategy, we hope, will generate better unit economics than our competitors because we're focusing on specific geographical locations. So Uber and Lyft don't feel threatened because, we looking at a larger captive client where there's a high number of passengers that are willing to pay fairer ride hailing and private charter fees, right? Not when somebody actually calls up and, hey, there's a surge pricing. So our drivers actually end up sharing that to the ride hailing company, but who's driving, whose brakes are getting worn out, who's actually sweating their backside, while they sit in traffic, right? It's a driver. So in reality, it should be the drivers who's actually getting compensated for the scenario that they're in, right? And we're seeing the demand for ride hailing, in fact, growing by up to 27% in the quarter of this year. So our focus on transportation in specific regions like Napa over expansion and diversification in the US and other countries is to make our global footprint using our core strength, blockchain technology.
Yeah, and I'm going to go ahead and echo. Blockchain this is a perfect example and use case for blockchain. Ride-hailing apps. I mean, there's a variety of things that Web 2 does very well, and clearly Uber and Lyft and the variety of others have made tremendous business models out of utilizing those Web 1, Web 2 technologies. What's missing around, and as you're being very clear, is the transparency and essentially the ownership. So the idea of continually enriching the corporate governance over and over and over and over and over and over and over, with trickle down effect only happening if the above so gods choose it, it is kind of going a little bit against the culture today, which is trying to be more, especially in Web3, which is we want to be a community. You want to have multiple communities of riders, communities of drivers, and make sure that those two intermix in a variety of ways. So when talk a little bit about where you're at today with this project, because I know you guys have built a lot of the code, and you've also integrated one of your other companies into this as well, correct?
That's correct, Jay. Yeah. So we're currently now in test flight on iOS as well as on Android. We've created the app here and given it to a couple of our drivers and done some test rides and so forth, right? And what we're seeing is that on an average, because we work on this bid system, so essentially if I'm in the middle of Sonoma and I can't get a driver, I can actually bribe or tip a driver to come pick me up. Because if a driver wants to pick you up, he's going to take half an hour from Napa to get to Sonoma at the very least, but you go on a 5-minute ride. So you need to compensate him for that 30 minutes that he's going to come specifically to pick you up. And by no means, all the drivers actually want to make a living and they want to help you out, right? But the democratic aspect is that, it's got to be a participative industry model whereby the Fairyde hailing platform creates a fair livelihood for the drivers by applying the power of Web3. So what do I mean by that? So we go through this bid model, right? $20 to go, say, from San Francisco downtown to the new Warriors Arena. If it's actually quite busy, I can actually tip $50-$60 for the driver to come pick me up, because when he gets there, he's going to get stuck, right, to get out of there and so forth if he doesn't get picked up by another passenger. So Fairyde's plan is not about creating another crypto ecosystem to fuel the speculative aspect of the market, because what we're doing is we're allowing the drivers and the passengers to start earning some tokens, right, in the form of a reward system. So we're creating Fairbucks. We've just minted Ride, which is our governance platform. But we want to unlock the hidden values of Web3 to propel significant productivity enhancement in ride hailing, buying, leasing, renting, and even investing in vehicles, specifically electric or hybrid vehicles. So we're tokenizing some of the vehicles that we're going to rent out to the drivers, and we're actually concocting the terminology. We're calling it NFFT, which stands for non-fossil fuel transportation.
NFFT it's a catchy tune. We'll just have to get a little jingle for it.
It is, right? So beginning with our own need to implement transparency, control, and compliance with our own organization as well as our user community. So we've begun creating a share registry system that underpins the internal only, to begin with, the issuance and trading process of buying and selling Fairyde shares. So our early investors, instead of giving a share certificate, we give them an NFT version of their share certificate, still registered with SEC, right? So the assets and tokens within our own ecosystem is starting with the share ownership allocated to our founding shareholders. We're tokenizing. So we're going to call it with an acronym FAST, FASST, which stands for Fairyde Asset Sub-Registry Shares Tracking Platform. So the development of our FAST platform to store and record Fairyde share certificates will be the genesis of converting all physical shares and assets within the Fairyde ecosystem on a Web3 platform. Right. So we're hoping that FAST will ease the internal trading and transfers of any assets within the Fairyde ecosystem in a compliant and secure manner, from company shares, fractional ownership of rental cars, payment to the NFT owners. So if you get a Tesla worth $63,000, for example, plus insurance, plus registration, let's say the fully loaded cost is 100 grand, we'll divide that by 100, right? And sell the NFTs at $1,000 each. So every time that Tesla gets rented, in a pool of cars or individually, there's a return to the NFT holders, right? So there's a recording and bookkeeping, as well as the management of the Fairbucks token rewards are actually kept on the blockchain.
So we'll bypass the security questions for now,
Yep.
and let's talk a little bit about the marketplace you're creating. And so I really love the idea around, like, look, this is its own little ecosystem. So you have riders, you have drivers, you have vehicles. I'm sure there's a bunch of other things that you have in your roadmap around there. But essentially all around this, it's like you have to have users and you have to have the ability to scale. So
Yes.
how are you right now planning on attracting attention into, a relatively crowded market? I mean, Uber and Lyft lose money on every one of their rides. They just give it away, and the whole point is they want to burn the taxis out and burn everyone else. How can you survive, essentially in a market where a negative profit is considered okay by Wall Street?
Well, first of all, if you look at the way our competitors are run, they're run as a corporate, company. Public listed CEOs are $19 million a year, right? According to the public records, right? Believe me, Jay, I won't be drawing down a salary that much, right? So we'll be running it pretty slim to start with. And, if once we actually scale up to a national model and so forth, then we'll look at how we can expand it more as a federated system that's going to be co-owned by the drivers. So essentially, we're issuing the ride tokens for governance aspect of the business. So as a manager, as a CEO, as a director, our management team will actually be there to look after the driver's welfare and the passenger's welfare. And we're there to basically manage the community. So we're aiming to build what we call an innovative platform for ride to earn, R2E, to attract drivers and passengers. So the ecosystem is built on Solana blockchain, in case I've mentioned, with native cryptocurrencies, the Fairbucks, we call it Fair, and
Yep.
Fairyde tokens, calling it Ride. So Ride is a governance token, and Fair will be used as a reward system, redeemable for payments of rides or interchangeable for ride tokens. So what this means is that the passengers and drivers alike can earn crypto tokens by simply being part and supporting of the Fairyde ecosystem. So we're hoping to create a bit of buzz around that. And how are we going to launch it? A few months' time, once we've done our seed raise, we're going to launch here in sunny Napa Valley, invite all the concierge services, the restaurants come in for cheese and wine, and we're going to announce it, right? We'll give them a bit of an incentive. Hey, you guys hail up one of our rides, you guys get a token of some sort, right?
That's awesome.
So,
So how do you, so talk me through around the app, because the number of people that I know that actually know how to use a Solana wallet, whether it's Ethereum or any of these things else, essentially a crypto wallet, is really low. So in the Fairyde app, do you need to have a wallet, or is it kind of managing that from a custodial perspective?
So what we did actually, Jay, is that we have adopted one of our e-wallets that we've created. So HyperPocket, it's called. The
Okay.
technology around HyperPocket, it's a multi-currency e-wallet that we're actually rolling out on the back of it. So it's quite ubiquitous, to a sense that people store value into their application to say, I've got 50, 80 bucks, or if my kid actually wants to go downtown, I just load up his Fairyde wallet so he can use that. Right. So you can also buy Fairbucks or ride coins to utilize that for your transport. So if you were to take the ride and you earn 5 Fairbucks, for example, they'll just accumulate and be shown in your wallet as such, because we don't want people to download, say, for example, a phantom Solana wallet, for example. Half or probably 70% of the population don't even know what to do with it. So we don't want to compromise.
I'd get closer to 97 to 99%.
Yeah, okay. You're a bit more generous than I am. So I think, yeah, that's exactly right. So, essentially people, we don't want them to be intimidated about the fact, now, what do I do with these ride tokens or these Fairbucks tokens? Do I actually share it? Do I use it? So essentially speaking, they don't need to do anything. At any point in time, we'll give them some sort of evaluation where their coins are at. Hey, Mr. Passenger, Miss Passenger, you just actually earned enough Fairbucks coin to get you from Napa Valley to the airport, right? So there's a value there on having to accumulated your frequent flyer points, for example, that you can go from here to Hawaii. for a certain number of points, right? So I want people to treat it like that to start with until such time. Then they say, what, you know what? The drivers will say, the fare box coins are just sitting there. What am I going to do with it? Mr. Driver, you can actually change that for ride coins. What does the ride coin do? The ride coin will give you vote, right? So you have a governance token that's going to be utilized by all the drivers to give you guys a vote and a voice on how we're going to run Fairyde as such. And secondly, these guys, the key aspect of this too, Jay, is that, you know, every ride that we bring in, so for every dollar, up to about 24% of the 25% that we're taking is actually going into the tokenization. So the liquidity pool for the ride tokens actually increases over time. So it'll appreciate in value, we're hoping, right? It's going to be a managed fund. Sorry.
No. So real quick
Yep.
on that point. So you've got a wallet, a crypto wallet, but it's just attached to their account. So whether they
Yes.
use it or don't use it, but let's say that you do have a couple degens in there and they get a little advantageous. Can they take those tokens and go mess with them over on the DeFi exchanges and you know, acquire more? You know, there may be a market for people that are just like, you know, I'm never going to, I was in Napa, I'm leaving. Let's go ahead and sell off my ride tokens. Maybe there's somebody that's acquiring them. So are you able to self-custody if you want?
Yes. So essentially, it's just going to be on the Phantom wallet. So our shareholders now, actually, they have a Phantom wallet. We give them the share certificates on their Phantom wallet.
Okay.
You know, any DEX listening out there or any centralized exchange who wants to list ride coins on their platform, essentially, we're going to have a wider adoption of this. But, you know, on the Solana exchange, for example, we're able now to exchange fare bucks for ride coins. So ride coins then can be exchanged for USDC, BTC, right? Or any other altcoins out there, right? So, you know, as those G-Gens comes on board, they can change that. The drivers themselves, you know, the way I see it, because these guys are 1099 employees, right? They have to accumulate their own 401k. I tell them, you got to look at this as your 401k. Don't touch it. Leave it there, right? Until you retire. We got one of our drivers who's done 10,000 rides for Uber, right? If he was to earn, let's say, for example, 1 ride coin or 10 ride coins for every ride that he did, he'll have $100,000 worth of ride coins by now, which is not bad for your 401k, basically, right? If you didn't touch it over time.
Yeah, there's a lot there. I'm sure you keep your lawyers very busy with some of these.
Sure.
But you know, let's talk about the tech, and I think that that's really interesting. So you chose Solana. You know,
Yep.
I'm a fan of Solana. I think ETH is an amazing invention of which time will pass by. It has its use cases, but it's not good for rapid transactions, and you know, level 2s don't even go there.
Yes.
So Solana, how has it been developing this on Solana? And you know, what kind of, you know, aspects were you kind of surprised by the dev cycles compared to prior projects that you've done kind of in that Web 2 space?
Well, I mean, you know, we're calling a lot of challenges as such because, you know, essentially a lot of the applications that we developed were third-party apps. So we minted the coin on another platform, which actually closed down at the very start when we're doing it. So we have to redo it again. So, you know, essentially, you know, blockchain as a key technology for Web3 is commonly associated with cryptocurrencies like Bitcoin and altcoins. So to start with, I had to educate my own front end guys who develops my app, my iOS and my Android apps, what underpins Web3 technology and how legitimate the technology can drive the future of decentralizing trade and commerce by creating a circular economy that intertwines a more democratic and fair and participative industry model. So just on the actual workflow in itself, it's not like one of those accounting companies that says to us, hey, just digitize our system so our workflow will be this, right? So one of our business processing guys, you know, re-architects their whole design of the way they do things. You know, the dystopian version of the centralized platform created by the major players today in the ride-hailing industry is not the ideal way where we can actually create an app from scratch by just copying something that's already available. Just to give you an example, victims of the pandemic, the bus that goes from the airport to Napa actually just closed down. So people actually face of having to pay 150 bucks to go from the airport to Napa and vice versa. So what we wanted to do is create a ride hailing for the 8-seater Sprinter van that we have, so that between 7 and 8 o'clock hard time, it goes to the airport. Between 7 and 8, you can hail the bus to come pick you up in front of your hotel on one of the streets here in Napa. So it's not about creating another crypto ecosystem. We had to create an application that would actually give people that productivity enhancement they're looking for.
So, with Uber, and I'm not as familiar with Lyft, but Uber, it was like they had proof of concepts, and then they got just piles and piles of money, of which they continued to burn until they asked for more money, of which they continued to burn. And it scaled, but not well, not without those piles of money. So looking at Fairyde and what you're trying to do, I mean, it's looking at your clear competitors, Uber and Lyft. You're trying to make some improvements, putting a little bit more of the governance in the hands of the riders as well as the drivers, and giving kind of that transparency between both. How well can this scale without just burning piles of cash? Like, do you believe that this could have a viral effect, of which, someone's in Napa, they go, oh my God, I love Fairyde. Can they take that just back to their own town and start, asking people to integrate or use it? Or do you have to have approved centers, which is what Uber started with, which is you had to come over, you had to give your car, they look through it, and then they approve you and you go from there.
Right. Because first of all, we talk about decentralization. We'd like this to become a peer-to-peer application. Right? Essentially, it's just about you and me. I'm the driver, you're the passenger. You want to actually call me up, right? I've got my TNC license, or I got my my license to actually drive a passenger car. So essentially, it's just about hailing somebody that's available. So all the Uber or Lyft drivers out there, they can drive a Fairyde platform, right? We go through a vetting process and ensure that they're actually qualified to drive. Apart from that, we don't stop them from actually driving for other companies. So how are we going to expand this? The obvious model is food and wine deliveries here in Napa Valley, right? You're talking about some of the monolith companies stripping value from the marketplace. On the average, they take 20 to 25% of the fare. That also applies, with food delivery companies like the Grubhub, the Food Panda of this world. They take 20 to 25% of the revenue. So where does that leave you as a restaurant? You're already 25% behind the 8 ball. You as a passenger, and when this a real experience from my point of view, what happens is that I actually get less portion serving. It's not as big as it used to, because the restaurant is losing 25% of their revenue. But hence, I look at them and say, who's taking the value and what are they doing with it? And they're still losing money.
Yep.
Right? So it's a lose-lose situation for everybody. I'm hoping if we democratize this and it becomes a peer-to-peer thing, the restaurant calls up the rider and they can just deliver it directly to the consumer, even better.
I love this. I love it. Absolutely. It's fun. What's been kind of a couple of the early surprises you've had where you go, oh, we didn't anticipate that, which is usually the case for early stage startups.
Well, in our tokenization stage, using Web3 and blockchain, if there's been a rug pull from a financial perspective, there was a rug pull from us from a source code perspective. So we just need to expand our own team, and whereby we're not actually dependent on third-party platform. And these days, you can just basically download something from GitHub and hopefully mash it up and then turn it out to be your own, right? A lot of open source applications out there.
Yeah, the challenge is, and I think you're experienced this as well. In fact, you very well know it. Web 1, Web 2, developing on that is very much like building a race car. Like, you can design it, you kind of spec it out, you send it out on the race courses, it's kind of half finished. You go, whoa, it wobbles, but it's good. You bring it in the garage, and you keep doing this until you have a perfect vehicle. As you very much realize, Web 3 is launching satellites into space. You design it, you test it, you design it, you test it, and then you when you fire it off, it's out there, and there's no bringing it back. So you really have to get the stuff right and build in the controls that if you do want adjustments, you're responsible for making those secure. We've seen so many hacks, so many, you know, kind of bridges getting you know, taken advantage of and whatnot. That from your perspective, you know, as you put this out and you say, look, I want people to have this be their 401k. I want this people to be their, you know, the retirement to own these. The security around that contract, you know, is got to be immense. So, and as you said, there's really very few developers at this day and age that have that level of expertise.
That's exactly right, Jay. So, you know, I mean, the challenge is there, but it's all been fun. You know, from working out the workflow, trying to incorporate Web3 into, you know, traditionally a Web2 environment has been the challenge. And secondly, how do we actually create an application that's going to be not another Me Too type of company? And, you know, there's a lot of aspects in the industry whereby the whole application was designed around the corporate objectives, right, for them to make money as such. But if you look at it, what the workflow, like I described to you, the Napa Valley airport kind of scenario, you know, if we created an app, how can you actually aggregate 8 customers into one van to get to the airport, for example?
Yep.
Right. And also the limousine services here. The limousine services here work on a referral basis. They have their own clients. They arrive at the airport. You call up your favorite driver, comes and picks you up. So we have now the ability to actually save the driver's profile. So next time you actually come to Napa and you say, hey, I like this guy. One of our first drivers, his name's Oxy. I like Oxy. Very friendly guy. I'm going to actually ping him first every time I actually drive to Napa. So you can book him 2 or 3 days in advance, specifically that particular driver to come pick you up at the airport.
So Randy, I mean, really amazing story. I mean, coming from Web 1 and really designing out kind of the mobile infrastructure for what we use today as Web 2 from that early perspective is really fascinating to hear. And now seeing, you know, you going and attacking not really a problem, but an enhancement of a solution that's still disrupting the industry actively. I mean, taxis still exist, the medallion system still exists, you know, but Uber and Lyft and this ride sharing has definitely disrupted it and is clearly taking over, but not without its problems, not without its issues. And so you're kind of now tagging along the heels and saying we can do it slightly better, and here's why, and giving a little bit of that governance back to the actual users. You know, I'll say in the disclaimer, I am Uber Diamond. If nobody knows what that means like I get to bump to the front of the line of anyone whenever, like if you at the outside of a concert, when I hit hail, it doesn't matter how long ago you were, I'm the next one in line, and right. Vice versa. I only get the 5-star rated drivers and over. So they do reward me, but I have no control over any of that. It just means I don't like renting cars anymore. And so there's the idea that you can actually go outside of that and control your own, you know, experience means a ton. You know, as we look at the rest of the ecosystem and, you know, overall Web3 asset class, what else are you seeing that's just kind of got you inspired in the same kind of genre?
Well, if you look at it, the finance and leasing of vehicles here in the industry, we can get more drivers in, but some of them can't afford to actually even buy a car. So, you know, how are we going to proliferate the application around? We want people to become NFT holders, right? They want them to actually become fractional owners of car that we can offer, preferably hybrid or EV, to actually buy that and put that into our ecosystem. So, you know, when people actually look at the models of Fairyde Technologies, no relation to Fairyde and Turo, right? If you look at a lot of those business, you know, for cars as a service model, the demand for subscription ownership is still widely popular with ride sharing and other delivery as a service. You know, I want to be able to actually get a car so I can deliver food, for example. And they need cars, access to cars to support their businesses for short-term and cheaper price points. I think that's something that we need to change. And if we can actually create an ecosystem where the cars or the vehicles can get crowdfunded, right? I'd like to take this back over the Philippines, you know, for social good, so that somebody over here in the US, for example, can buy somebody a little tuk-tuk, you know, for $3,000 and get them to pay for that, right? In an NFT format, right? So I think we can expand this a whole lot of other lengthways and, you know, sideways that we can actually look at. But, you know, for Fairyde, we don't intend to enter into business of lending money, for example, for drivers to buy cars per se. But instead, we want to partner with third-party people out there who wants to finance and willing to actually lease these vehicles, for the Fairyde driver or the ecosystem. That's one thing that we're looking at as well.
Yeah, no, listen, a huge fan of tokenization of assets. I think it's going to be one of the biggest things coming over the next few years as regulation allows. So absolutely love it. So Randy, you've got the platform, you're in test flight, which means, it's kind of early beta.
Yep.
If somebody wants to get involved, be a test driver and they're in the Napa area, how can they get a hold of you guys?
Yeah, so essentially, but when you go on a test flight, it's just by invite only. We've got 82 registered drivers now in our system, so we're just waiting actually for delivery of about 10 to 12 Teslas that we're going to get in a couple of vans.
Keep waiting.
Yes, exactly.
It took me 18 months to get my new X.
Yeah, I'm telling you, that's what it is. So, but we're talking to Toyota as well here. We're looking at hybrids as well and plug-in hybrids. So they're quite good. A lot of people actually have a problem. A lot of our drivers have a problem with Tesla having a very short range, even the 350-mile big batteries, right? They find it really cumbersome to go out there and plug it and wait for half an hour or so, right? So we're thinking of having 10 drivers and 11 cars. So keep that one plugged in and the other guy comes back here. So we're thinking of different logistics things. And when people actually want to come and drive for us, we'll let you know. We'll certainly go out there and reach out to all the drivers in social media, the unions and so forth, in those areas I mentioned: Vegas, New York, Manhattan, Orlando, Florida, and over here in San Francisco and LA, downtown LA, I should say.
I love it. Randy, have you even talked to anyone before about this? Or you guys have been dark building this for a while, haven't you?
You guys have the scoop here, Jay. You were the first public podcast platform that actually we've been into. So thanks to Brady Borbian, who's also a yWhale, and he's introduced us to you guys. And I think it's rightful that somebody like Brady, who's a yWhale, actually gave us the confidence and put up his first investment to one of our early investors.
I love it. Well, from yWhales to us, we wish you the best of luck. We hope to have you on Fireside here soon, learn more about this journey, and continue to watch you as it grows. yWhales, for all of you guys out there, this is Randy with Fairyde. Check it out, and absolutely, lots more to come. But thanks so much, and we'll catch you soon.